Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Main news of the day. The US Federal Trade Court has blocked the permanent implementation of import tariffs introduced by President Trump, ruling that he exceeded his authority. As an initial reaction of this news, the US dollar index rose by 0.53%, S&P 500 futures added 1.5%. And the euro is moving toward testing the target support level at 1.1066. A breakdown below this level would open the path toward 1.0955. We do not oppose such an unexpected turn of events, at least not in terms of a broad and long-term dollar strengthening, since we have viewed the rise of anti-dollar currencies as a temporary phenomenon from the beginning of the sanctions war. But will today become a pivotal moment? It's quite possible if on the weekly chart the price consolidates below the MACD line. It's a blue line on a graphic, which coincides with the May's low at 1.1066. Should this happen, the first downside target would be the March 26 low at 1.0733. The daily chart shows that the price has broken below the MACD line and the support level at 1.1266. The Marlin oscillator has plunged deeper into negative territory. However, if today's candlestick closes at least at the opening level, this downward move may prove to be false, and the dollar's global advance would be postponed. In that case, the euro might attempt to overcome the 1.1535 level, with the target at 1.1692. Considering market momentum, the absence of clear reversal patterns, stock market optimism, rising yields on US government bonds, and the lack of a yield curve inversion, we maintain the euro's growth as the main scenario. On the 4-hour chart, the price has settled below the MACD indicator line. It's a blue line on a graphic at the 1.1266 level. However, this move may turn out to be false. A rise above the MACD line, specifically above the 1.1290 mark, which also coincides with the MACD line on the daily chart, would be a strong signal for growth toward the target level of 1.1420. And now it's time for GBPUSD. Let's discuss it with Paolo Greco. The average volatility of the GBPUSD pair over the last 5 trading days is 82 pips, which is classified as moderate. On Thursday, May 29, we expect movement within the range bounded by levels 1.3388 and 1.3552. The long-term regression channel points upward, indicating a clear uptrend. The CCI technical indicator has not recently entered extreme zones. The GBPUSD currency pair maintains an uptrend and continues to rise regardless of external conditions. The de-escalation of the trade conflict ended as quickly as it began, and the market's aversion to the dollar persisted. Every new decision by Trump is interpreted negatively by the market. Therefore, long positions remain possible with targets at 1.3550 and 3552. If the price stays above the moving average line, it's a sign line on a graphic. A break below the moving average would make short positions relevant, with targets at 1.3388 and 1.3306. The US currency may occasionally show minor corrections, but a more substantial rally would require new signs of real progress in de-escalation the global trade war. That's all for today. Wish you best of luck.